To bring in Kevin Green, senior markets correspondent, to help set up the action today. Our own KG, the Green. You brought the Green back, Kevin Green. Sorry, I'm hitting you with the pun early in the morning. I hope you had your coffee. All right, KG, let's talk about the setup for today. You know, you made the point that even with that sell-off on Friday, we were still closer to records than away from them, and it seems like that proved true in terms of the market action. How would you characterize the way this week started?
Yeah, obviously, once again, we had a little bit of a volatility spike on Friday, and that actually does give you a decent opportunity to try to maybe potentially catch some of these dips, and that's exactly what happened yesterday. Not only did we see, greater than a 1% gain in the S&P 500, but you saw market breadth pretty strong yesterday. Around 80% of the stocks in the S&P 500 did move to the upside yesterday, and we were able to reclaim that 20-period moving average on the daily chart for the S&P 500. And we actually had a pretty long streak there where we were trading above it, and then obviously Friday is where we kind of violated that. So nice little bounce back. We had some decent earnings when it came to Palantir. Let's see how the AI trade's going to do. I believe we also have AMD and SMCI on deck this week as well. That could also fuel maybe some of that semiconductor trade, which is obviously a key component for us to try to maintain these current levels, as well as trying to move higher here. Now, we do have President Trump actually speaking and doing an interview right now, so we might see some volatility from his commentary. And I think the biggest risk that you have today, Diane, is going to be the ISM services print that we will have later on today. Obviously, the services economy is a major part of the U.S. economy, around 65 to 70%. And we have seen maybe some fluctuations when it comes to that number as well. The price component is going to be the key area. Hopefully that does kind of subside and move to the downside or decelerate a little bit. And that probably will give us enough fuel for us to try to continue this rally. And from a technical standpoint for the S&P 500, if you are a technician there, you can make the case that yesterday was also a bullish engulfing candle if you're looking at the open to close levels there, which is actually still pretty bullish for the S&P 500 as a whole.
Okay, let me ask you a little bit about volatility. We pulled back a little bit. VIX below 18 right now. How are you weighing the risk of volatility accelerating?
Yeah, well, that's actually a really good question. If you look at over the last year or so, usually when we have the first initial vol spike, which I would say that was probably on Friday, we usually do see it subside for about a session or two, and then it tries to re-rate a little bit higher. There's only about 2 instances where that did not happen over the last year here. So I would still kind of keep your head on the swivel that maybe some economic data or maybe some headlines could actually shake this market out. But on the other side of that, when we do have heightened volatility, it does also provide some pretty decent gains for the S&P 500 for a couple of reasons. One, obviously you do have elevated premiums for the S&P 500 options, as well as other index options that are out there and equity options. So you have the opportunity to sell premium or sell puts, which kind of puts a little bit of a floor in the market. And then also, once again, once you start seeing this volatility crush, that also gives a little bit of strength for any type of push to the upside in the market. So I think mechanically right now we're still in the sweet spot, and your biggest risk is not so much August, which we probably will see some heightened volatility. August usually does not see green on the screen, if you will. But it does give us some opportunity to try to continue to make new all-time highs and then brace for September, which the September options, the quarterly options expiration, usually is that key catalyst for us to see a pretty decent pullback in the market, meaning a 5 to 7% drawdown.
When you mentioned that green on the screen, that makes me think of the heat map yesterday where you saw a lot of green, or even if you look at it in the pre-market. Let me ask you now, I know you mentioned Palantir, we'll get in those in a second, but since we're on the subject of where to go in terms of the S&P 500, given where we finished yesterday, 63.29, where are you looking to the upside and potentially to the downside?
Yeah, to the upside, the top tick options that are trading so far for the S&P 500 is sitting at 63.80. To the downside, you're still looking at around that 6,300. So that 6,300 was an area of support or resistance that we talked about yesterday. We were able to actually exceed that. Now that is going to be flipped to an area of support for this market. Hopefully, some buyers really do try to step in here. One thing to know about the volatility curve, once again, we are seeing volatility kind of come in here, and you are also seeing that with the SPX options. The index options are also getting relatively relatively cheap, a little bit more meat or more premium in the middle there when you get closer and closer to intrinsic value. But if you're looking at the wings, you are already seeing the results of us trying to crush volatility. And crush volatility kind of leads to a steady move to the upside here, but also kind of leads to compression in the markets where you have these defined ranges and considerable support and resistance levels. And if we're in that type of market here today, which we were kind of doing that about a week ago or so, I think that's once again kind of conducive for equities continuing to try to push higher here, try to recapture some of these losses and meet all-time highs, hopefully by the end of this week.
All right, let's talk Palantir. So Palantir delivered yesterday in terms of its results, strong results on revenue especially. Dan Ives out with a note early saying the Messi of AI, as we know he calls Palantir that, delivers strong result, blows away buy-side expectations. The stock is rallying in the pre-market. It's already had a banner year. What were some of your takeaways from its results, KG?
Yeah, we're seeing the stock up over 6% in pre-market trading here. And yes, it was just a phenomenal report to say the least here. When you're looking at the adjusted earnings per share, they did beat, coming in at 16 cents. Street was looking for around 14 cents. But the revenue did actually top $1 billion. First time for this company here. The Street was looking for $940 million. So exceeding the Street's expectations by $60 million. But when you're kind of looking at some of the internal metrics for this company, this is where it's actually pretty remarkable. The U.S. commercial revenue growth that we saw for the quarter actually came in at $306 million here, around 100% growth on a year-over-year basis. And when you're also looking at U.S. revenue just in general, up to $733 million, up around 68% year-over-year. They continue to bring in very large customers at a very rapid pace that exceeds the Street's expectations. The free cash flow continues to improve, and they did raise guidance not only on the top and bottom line, but also when you're looking at the free cash flow metrics here. So this company is actually following through. It does have a lofty multiple if you're looking at the forward PE ratio just in general, but if you're actually looking at growth rates, obviously it's one of the better companies that we've seen over the last year, continuing to exceed their expectations. And you can also make the case, Diane, that the guidance that they provided for the remainder of the year here, for the fiscal year, is probably actually fairly conservative compared to what we've seen over the last couple of quarters.
Okay, and then I want to get across another earnings mover this morning, and not as much momentum, but Pfizer out with its latest quarterly results. This one is a tough stock for investors, whether we're talking about year to date, 1 year, or even over the past 5 years. But look, they beat expectations. What do you notice about its results?
Yeah, so when you're looking at Pfizer, you are seeing now a transition, a pretty considerable transition away from the COVID-19 drugs, and they're really trying to diversify away from that, especially in the latter half or the second half of their fiscal year. The adjusted earnings per share actually did beat the Street's expectations, coming in at 78 cents. Street was looking for around 58 cents there, and revenue did exceed the Street's expectations as well, $14.65 billion. Street was looking for $13.56 billion, and they did actually raise their adjusted earnings per share guidance as well as highlighting some cost-cutting measures here. They're expecting around a $7.7 billion savings by the end of 2027 here, and including in that is kind of a restructuring when it comes to their R&D costs. They're going to save around $500 million because of reorganization savings, and they also had another line item for a potential for an acquisition that they're making. So they're trying to make the turn. It has been a very tough market, especially when you're looking at the vaccine market just in general. Over the last couple of years, we have seen the COVID-19 vaccine kind of wane when it comes to demand here. And you are seeing the shares up slightly in the pre-market trading. Let's see if it's going to be able to maintain itself as the equities really do open up here. But the healthcare sector as a whole, especially when you're looking at pharmaceuticals, has been really beaten up over the last year or so, just given the environment that we are in and the regulatory nature of the business.
All right, then thank you, KG. That's our Kevin Green, senior markets correspondent, with a look across diversified basket from Pfizer to Palantir. Palantir rallying still.